So
That do you notice there was a high that Bitcoin broke and did not come back for a retest?
yeah, it's possible for price to come back to that high, but what I don't want to do is to try to predict that price will come back here, seeing that there's already an inefficiency or this imbalance that is here and this small one here. Price can literally dip into this imbalance and use that as an excuse to reverse and not tap this high. That is why I'm not really banking too much on this high being retested. I'm more interested in the imbalance because once we rebalance using the imbalance, we could literally rally. That was why this is a typical example. And I missed this trade and it was really very hurtful because there was an imbalance. It literally just used the imbalance and reversed on me. And I missed the trade. And so that's part of why I usually wouldn't recommend focusing too much on that high because the high can still work, but our focus is on the imbalance here and this imbalance here. That's our focus. Once price is inside that imbalance, we just want to see our break of structure, time frame break of structure. If we see that, we start looking for a buy
Nice.
to continue higher. So you can still mark the highs. If it gets mitigated, it will make your entry a lot smaller and a lot more precise because now you'll be waiting for a 1 hour break of structure. And once you see a 1 hour break of structure, you can look for your entries. Now, the beauty among all these things is when you're using the Fibonacci and an imbalance, the alignment of the Fibonacci and the imbalance, this is what will give you a lot more confidence when you're taking a trade. Because if you are looking for an area of interest where you want to buy, and then you use your Fibonacci, and you see that that area of interest also aligns with either a discount or extreme discounts or premium or extreme premium, that makes it a higher probability. You can see that in this case right here, the imbalance on the monthly that will have resting right here is also in a discount position. This is a good area of accumulation. And when you even take this down to weekly, you can see there's another imbalance here, even lower inside the discount.
Yes, boss.
Just price.
Marked all of them out.
Awesome, because price can still decide to want to use this imbalance because they are all inside discounts. Now, if you look at Ethereum on the other hand as well, look at Ethereum. If you look at Ethereum here, now, if you use your Fibonacci from the overall high to this overall low, you can see that price has already taken liquidity above this high. This is still your equilibrium. And this imbalance is still aligning with that area. But now, because our focus is on the imbalance and not the equilibrium, what we focus on is a break of structure inside here. We can still keep waiting and price will reverse on us and continue higher. Because this is now our new range low, and this is now our new range high. So range high discount. And there's an imbalance resting inside that monthly range discount zone. So that's already giving us a telltale sign, despite the fact that if we're using the Fibonacci from this low to this high, this one here is giving us a telltale sign to be very much aware of that. Because a break of structure from here is still from a discount zone. Because this is one impulse leg. If you wanted to buy it, even if it's long-term buys, this is a good area to start accumulating buys with anticipation for price to go to the upside.